It's okay if you need time, just give me some peace of mind. And if I gotta wait, I'll wait patiently. I'm trying to have a little sympathy, 'cause I know I screwed up and it's not easy, but I'm only human. Don't know how to do this. Could you try to have a little sympathy? 'Cause I can't get you off my mind is full of knots. You're playing through my thoughts like this melody. No, I can't get you off my mind is full of knots.
Morning. Good morning. Good morning. FXStreet 188. How you doing, huh? Welcome to FXStreet Trade Non-Farm Payrolls. This is the 188th month of doing this webinar. Hey, moderator. Good morning, moderator. Everybody give a round of applause for our moderator. The best moderator on the planet. This moderator should mentor other moderators so they know how to moderate. Hey, moderator. Are you able to turn on the functionality where I can ask a poll in the chat? I like to do polls in chats, but I think you got to be at a certain level. So, or maybe you can create one for me. And the poll would go like this. I think you can only have 4 choices. What would you like to trade today? Let's say like dollar, yen, Swiss franc, Bitcoin. Can you do that? You could probably do it right from the chat. I can't, that's all. What would you like to trade today? Dollar, Swiss franc, Japanese yen, Bitcoin. But anyways, good morning. Buenos dias! Cisco kids in the house. Yeah, thank you, Marina. Good morning. All right, so welcome to Non-Farm Payrolls Live number 188. My name is Wayne McDonell. I'll be your guide today. I'm a currency trader. I'm the chief FX market strategist for Traders Way, a boutique foreign exchange trading firm that would love the opportunity to earn your loyalty and respect. They earned mine long time ago. And they did that through the Swiss National Bank debacle of whatever year it was. Big brokers went out of business apparently because they were trading against their clients, and they got caught holding the bag when the market tanked. They went out of business overnight. Very big brokers. At Traders Way, nothing happened. They're like, oh, everything's cool here. We entered all the trades into the interbanking system like our clients wanted us to. So they might have losing trades, but as a broker, we're fine. That was their decision. So I'm like, oh my God, that's just so amazing. That's just so amazing. Instantly earned my loyalty and respect, and that was many years ago. You might like fast execution speed, narrow spreads, huge swaps. By the way, I was just looking at a very big, large broker out of the UK for a client, and I looked at the spreads, and they were being charged negative spreads on both sides of the swaps. And I'm like, do you understand that this broker is like basically taking money they owe you, put it in the pocket, and then charge you for that service of taking the money they should pay you? Wow. I'm like double dipping on the negative. Like, dude, seriously? The business model is based on the premise that you should take from your clients? Like, dude, seriously? That's your execution partner? This is your service provider to your business? And their premise is find ways to take from you? Dude. So anyways, tradersway.com. Give them an opportunity to earn your loyalty and respect. Open a demo and go for it, man. Get her done. So, hey, we got an interesting period of history going on right now. Do you guys know who Charlie Munger is? Who's Charlie Munger? Do you guys know him? Yeah, that's Warren Buffett's right-hand man. Yeah. You know Warren Buffett, right? That's his guy. They're like best friends. They've been working together forever. They make all their decisions together. He said something to the effect that what we're going through right now is, I think he said wild and wacky. I don't know what he said. This is more chaotic. Berkshire says even crazier, and this is his words. Berkshire Hathaway Charlie Munger told a conference on Friday that the markets are wildly overvalued and .com and all this kind of stuff, and everything is crazier than the .com bust. Interesting, huh? So, there have been some interesting situations, we'll say, in the marketplace over the last, I'd say even the last couple of weeks. And I think we're going to have an opportunity to talk a lot about what these things are, but I want to understand that there are cross currents in the market right now. Yeah, and Minimal said he's seen every possible market. He's 150 years old. He's so rich he can't afford to die. Okay? So, here's the thing. There's a lot going on and we hopefully can cover all these topics. Okay? Now, non-farm payrolls is inside of all of this. This is a really sort of academically interesting non-farm payrolls, but fundamentally, it's probably not that important. But we'll break these down into pieces so you understand what's going on. But you have to understand the cross currents. So we have a lot. We have a taper that has been recently announced. The Fed announced the taper. And then people from that tried to deduce or deduct after the taper when would a rate hike happen. That will impact the market on the short run. Things like where on the yield curve should you put your money if you're a bond investor? And remember, the bond market is way, way bigger than the stock market. And we are impacted. Oh, thank you, moderator. Please enter the, yeah, awesome. Thank you very much. Please answer the poll that just went up. So anyways, the bond market directly influences currency prices and therefore what we do. So that's one thing. The next thing is the interest rate. When does the interest rate go up? And how quickly and how far? Once again, that'll influence the yield curve, but on the medium to longer term. And that influences dollar values. We have Omicron, which may or may not shut down economies around the world, which would directly impact global money flow. Global money flow has an impact on things like inflation. So now going to non-farm payrolls, we have to look at the dual mandate of the Fed. Make sure people have jobs, make sure inflation's in check. So we obviously have a good recovery from the worst part of the initial COVID crash and when we shut our economy down. And we're probably at full employment. And full employment pushes wages up create inflation. Okay? However, there are lots of people that are not participating in the workforce. For example, there's 2 million women in the United States that still don't have their old job back. 2 million. We want these women to come back to the marketplace. Okay? And so as they come back, that will change the unemployment rate, you see? And it will maybe draw down some of the inflation pressures from wages. Also, this time of year, and in particular, if you think about the abnormal jobs market we've had over the last couple of years because of COVID, think about people losing their jobs in retail, people losing their jobs in travel and services, people losing their jobs as teachers, okay, last year. Well, now this is going to impact things like seasonally adjusted measures in the job report. So that's going to be weird, which would then mean last month's non-farm payrolls could have a pretty significant readjustment as they had another extra month to do more research and get better data. So, wow, all of this will lead to people's assumption. So this is now behavioral finance that we're talking about, not economics and finance, but behavioral finance. This number, depending on what you're looking at, what you're reading, are you looking at full employment? Are you looking at the adjustments? Are you looking at the headline number? Are you looking at the unemployment rate? Are you looking at the wage growth? Are you looking at labor force participation? Like all of this now is being scrutinized where, hey man, like 5 years ago, you probably didn't even know all these subcomponents to the non-farm payrolls, right? So now people are breaking these different things down. And like, for example, we could have 10 different traders or investors, and they're all trading non-farm payrolls today, but they all look at different things and therefore make different types of decisions. Short run, medium run, and long run, and all this, right? And so we got to figure all this out. Ultimately, we do know the Fed has re-announced that they're going to speed up the taper, but by how much? Double would get the job done by March. Then, when is liftoff? When are they going to raise interest rates? That's being hotly debated right now in the market through pricing of loans, bank-to-bank loans. So if you look at the short run, it's interesting how quick and the interest rates are being priced in. But then what about long term? And this will impact like things like the 30-year note differently than the 2-year, right? The 30-year bond will be impacted differently than the 2-year, and money is shifting around, and portfolios in the stock market are going from companies that were growing fast because of, let's say, stay-at-home kind of plays. Those investments might need to be rotated either back in or out. And now companies that will benefit from rising rates are the new thing to put your money in. And many companies that a lot of traders have already invested in may be hurt by interest rates in the United States going up 1 or 2% over the next couple of years. Either they have too much debt or they're just somehow exposed to these rate hikes or whatnot. So what'll happen is there needs to be a rotation of investment, not necessarily a selling of the stock market, although it will come down. But a rotation means, let's say you have 20 stocks in your portfolio, you sell the 5 that are going to be most negatively impacted by an increase of interest rates over the next few years. So you dump those at the top of the market, but then you buy some 5 new companies later. So that means the market will go back up. But that premise now is based on how are we going to be impacted by Omicron? Maybe you need to go back into the stay-at-home recovery plays, right? Did you hear Peloton is up again, or just got a buy rating from somebody? Like, so that bank is already betting on Omicron being bad, and a lot of people are kind of looking the other way. So it's just like, wowzer. I want you to think about this. Investors and traders around the world, regardless of your market, you're a Forex trader, you're a commodities trader, you're an options trader, you're an equities trader, you're a bond trader, Fed Fund futures trader, for example, all these different things, just pretty much every type of investor is getting blindsided from both sides. And everybody's scrambling to figure out how to hang on to their profits, okay? Still turn a profit in the choppier markets, and then still try to figure out what they want to do for the next year. So, wow, what an amazing, interesting time we're in now. Okay? And one thing I want you to carry away from is I don't think we're going to have sort of binary, absolute interpretations. So if I'm looking at the labor force participation rate and you're looking at the labor force participation rate, we might come to the opposite conclusions from each other based on what our bias and our outlook, like our thinking. Like, for example, there could be 2 traders. They're both pretty good traders, but one thinks Omicron is going to bring the global stock market down out of risk and so on and so forth. And we remain in a risk-off mode like we were in November. Meanwhile, somebody else, just as competent, will say, no, I think it's all overblown. I've been watching all the reports. Nobody's dying. This is overblown. We can deal with it. Science will deal with it. Humanity will deal with it. None of the governments really want to shut down. So let's get back to doing what we want to do. Let's push that stock market up. Let's grow. 2 opposite opinions by 2 competent people. Now, I want you to extrapolate that out to millions of people in this market. Okay? All competent, but may disagree to one level or another, to the point of maybe complete opposite opinions, but the same competency. Okay? Forex Pipper says, hey, as a doctor, I can tell you the best way to face all the new variants, in addition to vaccines, right, will be AV drugs. Like, okay. Interesting. So the day that it was announced that there's a new variant and it could be bad, and we had that Thanksgiving crash, I hired a PhD to work for me. And this PhD's thesis that he's working on is he's creating technology and a model for surveillance of COVID-19 variances and mutations, specifically for SARS-CoV-19. right? So he's doing all this research, he's building all the models, he's building the technology in the lab, and then he works for me in the evening. And I have him going through all the CDC, all the World Health Organization, through all the major press, and looking for things and answering questions, writing summaries in his own, expertise, writing summaries of what is out there, but then documenting in proper MLA bibliography format his sources. So I'm not asking for his personal opinion. I want him to read something, translate it, and then cite it. And he's answering all these questions for me so that I don't have to rely on Bloomberg, CNBC, Fox News, CNN, right? Wall Street Journal. I don't have to rely on their Reuters press releases or their political blindness. Okay? So that was my response. I interviewed 2 pharmacists, 2 practicing doctors, but this guy's PhD is specifically in the surveillance of COVID-19 mutations. And now he works for me. Cool response, right? Yeah. So he's doing research right now. It's cool. Yeah, Forex paper, I totally agree. All right, so anyways, what an interesting time to be alive. And if you've been doing quite well recently, awesome. You're probably highly technically focused, which is great. You're probably more of a day trader, although we had some swings and then the swings all kind of disappeared. And now we're sort of in this crossroad of we're at buying points, but the market's not really, in most cases, buyable. So a lot kind of needs to happen. Okay? Wayne, were you going to do this for seasonality still in the plans? Well, seasonality is seasonality. I mean, right? You don't throw out, Joseph, you don't throw out seasonality. It's more like, what do you if you understand the seasonality aspect, you know what usually happens. Not always, but usually. And so you can very quickly say, wow, what's happening now is unusual. Okay? So we could talk about that. For example, okay, let's zoom in for the month of November. Okay. Let's see, give it a little more. Okay. You see this? This is the Kiwi dollar index. Typically, if you want to get into seasonality, this would go up 2% in November. Okay? It didn't, but at least I know that's unusual. By the way, moderator, can you end the poll? We have over 100 votes. That seems reasonable. 30 is statistically relevant, so 100 is good enough. Thank you. Awesome. Thank you, moderator. What would you like to trade today? Dollar, a little bit of yen, a little bit of Bitcoin, a little bit of Swiss franc. Okay, very interesting. I'm glad I asked that. So again, thank you, moderator. I would say the dollar would be muddier than other currencies, but we can look at that. I guess you just lean on the dollar. But I think the better answer probably is yen, but that's okay. That's okay. So I will start with dollar, make sure I cover a lot of dollar today. Okay. Nobody's really interested in Bitcoin. That's interesting. Okay. And Swiss franc. Swiss franc is one of the best currencies right now. OMG. I'm so glad we did this. Right? Like, you're probably better off not trading dollar, but instead of trading Swiss franc. You're like, I don't trade Swiss franc. All right, well, that's part of a risk-off portfolio. So interesting. So maybe we can talk about that. Okay. NFP, how effective for Dow Jones 30? Can you explain? I have no idea what you just asked me. What do you mean, how? How does non-farm payrolls impact the Dow? Well, I want you to understand one thing. Okay? We already know the trend of average hourly earnings, headline non-farm payrolls, okay? So on and so forth. So we're not likely to learn much. What impacts the Dow isn't non-farm payrolls per se, but what the Fed's response is going to be. So one thing you would look at is if it's a really big red hot non-farm payrolls number, it's going to tell the market that they want to raise interest rates sooner. Maybe in the first half of next year. So you want to look at it that way. FX Pipper says we're witnessing another big manipulation in FX from the SMB. They can't get Swiss to go down enough. Right? Yeah. And I have talked about that recently. But it is a risk, but I wouldn't overstate the risk yet. But I don't disagree with you. I just don't totally agree with you. Okay? So anyway, so seasonality works this way, ladies and germs. And let me get my drawing tool. Epic. Okay. Typically, over the last, let's say, 5 to 10 years, okay, this pair in November should have gone up 2%. So somebody asked, well, do I adjust my seasonality? Well, seasonality is seasonality. It's what's normal. So the interesting thing is I did crazy well in October, like stupid good, right? And many of you guys did as well. Like October was so straightforward, so predictable, so technically awesome, so just normal that we destroyed it. We crushed it. You know, it was raining pips. And so in the beginning, I would have expected, right, some additional up because I'm thinking, well, historically, this will continue to go up. There will be a dip, of course. There's always a dip. So if October looked like this and then November starts like this, well, that's not need, that's no need to panic. Okay. MHZ slot says NFP not effective indices. I never said that. It's not what I said. Okay. Okay. So the thing is, if you're expecting now this is seasonality, and instead you get this. Okay? The question is, how and when do you realize you're wrong? And how do you behave when you've decided that you're wrong? So I did buy in here, for example, with this understanding that I was buyer in October. Why would I not be a buyer in November? And in fact, I expected it to go up at least 2% in November. So I bought a dip. Everything was golden. And then it collapsed. So in this place, because now there's maybe a plan B, right? It's not all one plan. So maybe now plan B is down here. Okay? Actually, let me make it slightly higher. Plan B might be, buy in this zone. So you set it up and you buy that. and then you start to see it come down. At this point, I think even by this point, let's say the third trade, okay, I dropped leverage by 66%. And by the time we were back here, okay, just basically not even trading it. Because, well, technically it's telling you this year is different from a normal year. And that's how, in that case, the seasonality doesn't put you into a trade. It helps you plan your trades. In this case, it helped me plan the trade I expected. Then it helped me manage my risk. And then it, right, by catching it lower and smaller, and then really freezing risk completely. Okay? Okay? Yeah, so FX Pipper says another thing. How can you justify buying euro? Well, the Dixie's strong. Well, that's the interesting thing. So let's go back into here. I just want to make sure these are still all hourly. Okay. The interesting thing is if we look at dollar, and dollar was weak, and then it was super strong, then it was weak, and now it's strengthening again. And then what happened to euro? Kind of the same. And it's interesting because a lot of this is tied to the stock market crash. And what you may have noticed in the moment is when the stock market was coming down, the euro was going up. Now, in a scenario like that, okay, what is normal is Japanese yen gets strong, and that happened, right? That happened, so that's totally normal. Swiss franc would get strong. That's totally normal. So this is kind of answering someone's question about, the stock market. Well, if the Swiss franc is going up and the yen is going up, whatever stock market indice you're using is probably coming down. Almost certainly coming down. Okay? It's a highly inversely correlated scenario. Okay? And typically you see this. Dollar is strong. But in that particular moment, the Dow dropped like 1,000 points. The dollar was weak. Let me do this in a different color. The dollar was weak. What? See, Swiss franc strong. I would expect that. Yen strong. I would expect that. And they were. Dollar weak. Whoa! That's the exact opposite of what should happen. And you know what happened? On euro, euro was straight up like a rocket ship. And the interesting thing is the way to interpret these tea leaves, because again, I'm not looking at what is happening. I understand what should be happening or like has happened every single time that I remember. And throughout the 20 years I've been trading Forex, dollar should have been strong in that scenario. But in this particular case, euro was strong, dollar was weak. So how do you digest that? And according to the Bureau of Labor Statistics, the Bureau of International Settlements, 40% of all the volume of Forex, so 40% of everything we do is euro dollar. Okay? Money going from Europe to the United States, or money going from the United States back to Europe. 40% of the $5 or $6 trillion. 40% of it is just that one pair. And what it showed me is in this craziness of everybody getting out of the stock market, a huge percentage of those investors were Europeans. And now, maybe because of the stock market coming down, but you have to understand in Europe there's fear of further lockdowns. There's stuff going on in Eastern Europe. There's Austria is shut down because of COVID. Germany there's all kinds of things up in the air. Like they're like, oh no, right? Do we need to lock down? Is it going to get worse, right? And this is all before Omicron, and then all of a sudden Omicron shows up. Wowzer. And that shows a huge flow of money out of the U.S. investment arena, whether it's stocks or bonds, and back to Europe. It's not people buying euro. It's people exiting their dollar long positions. Okay? Okay? Interesting, right? That money has gone back to Europe. It's really interesting. Now, maybe it's some Americans actually saying, okay, let's cash out of the stock market at the all-time high where everything is expensive, and now let's buy some cheap European banks or something like that. Okay? I bought European banks and airlines, 6 months ago, with the idea in 5 years they won't be at the all-time low. So anyways, interesting, right? So that's what we can observe and understand about the market. Europeans have been investing their money in the American stock market and not their own stock market. Europeans may not actually believe in Europe, or just the S&P 500 was a better investment, that's all, in their mind. Okay, tons of questions about gold. Let's take a look at that and see what we know. I want to do a comparison. Let's start with oil. And let's just clean this up so it's just a much simpler chart. Okay? This is what oil has done in the last 2 years. Oil was at 0, and then it was 86. Meanwhile, if we're measuring high, low, and close, and dividing that by 3, we get these adjustments. And then from the adjustments, we have new predictions. So this predicts something like that. Okay, fine. But you'll notice that we basically go from the central pivot point basically to the M4, and that's a typical move. It's not quite perfect, but you can see it was obviously a move, and this is for the entire year. So this is March of 2020, and this is just a month ago, right? When we tapped the SPR and brought oil prices down. Cool. Great. So if we do that same analysis on gold, what do we see? This is the year. Dude, nothing happened. Remember, if I could overlap it, it would look like this. This is what oil did. Okay, oil went up. Gold went nowhere. So for those that are so concerned with gold, you might be over concerned. Now, what would you think? What should have happened? If this isn't what you thought, what should happen? Well, first of all, to answer that question, you have to say, well, what are the market conditions? Okay. Employment went up to near full employment. For the first time in 25 years, we have wage growth. Okay? And we went from let's say less than 2% inflation for the last 20 years to suddenly 6%. So now we have high inflation. Employment went up, wages went up, inflation went up. What should happen with gold, in your humble opinion? Gold should have gone up. Okay? What else happened? Demand, or if you want to call it consumption, went up. And what my Harvard professor and I argued about one time, it happened to do with gold, And what he was telling me was if consumption goes up, consumption for everything goes up, and that includes the consumption for gold. Well, maybe my Harvard professor was wrong. Anyways, that's how a model would work. So there is something else. There's something unnatural, let's say. Now, there is a lot of government intervention going on in the world, and now we're in a mood or mode of removing that government intervention, but it's still, the removal is a process of unwinding something that was unnatural, which makes what is now happening still unnatural until it stops. So the supply and demand and all this is kind of weird. There's also a bit of substitution now. People don't buy gold for anti-dollar. We have Bitcoin, which is anti-dollar, although it's highly correlated now. So it's just kind of interesting. Something's going on here. But to the 5 people that asked me 5 times each what my thoughts are on gold, I'm like, why do you care? There's so many other things you should be doing. But I understand a lot of people are holding gold and physical gold and all that kind of stuff. And while you got a good hedge, well, okay. But like the stock market went up 27%. And your gold went up, what, 2%? Well, you bought a safe haven. You expected it to go up and it didn't happen. Well, if you look at now dollar, so let's go to the anti-gold. If gold is anti-dollar, let's go back to the dollar. Okay? And we go back to, let's back this out and look at, let's go further out then. I want to start with like the summer. All right. Okay? Somewhere around here, you may have thought that the dollar would weaken. If you wanted gold to go up, you want this dollar index to go down. In particular, here. And you never got it. We came back, and it went up and not down. So that's probably impacting your gold, but it's interesting that gold hasn't come tumbling down either. Do I foresee crude dropping down to 60? No. A couple of weeks ago, I said 60 is probably the number. So now that we're kind of there, we have to worry about other things. Okay? I think OPEC is meeting soon or today or whatever. So pay attention to OPEC. So just go to the OPEC website. Easy enough. Go to the International Energy Agency website and go to the Energy IEA and EIA. International Energy Association and the Energy Information, anyways, the IEA and the EIA websites. Okay? You should go look there. I sometimes then also look at the oil companies and pay attention to that, okay? Okay? Thank you, Jimmy. Okay? Yeah, they met. Yeah, well, they'll keep it. Thank you. Yeah, that's what I thought. I've just been so distracted with other things. It's just crazy. So what I'm trying to say is this would lead you to think gold down, but then you might be worried about red hot inflation, which makes you think gold up, and therefore gold has done nothing. Okay? Interesting, right? So again, let's cover a couple of bullet points in which you want to pay attention to when it comes to non-farm payrolls. Let's do this. Let's just open a random chart here. That one's pretty, so we'll do this one. La 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 la. Non-farm payrolls. NFP. Cool. All right. 1. Headline number. What do you think? What do you think it's going to be? Okay. If it's 600 plus, okay. Interest rates fast. Now, this is one of the currents. I think the taper is creating dollar strength since June, because remember, the market thought the Fed was going to announce a taper in June. Remember that? And then I just showed you the dollar index. It started going up in June. Then we finally got the taper announced, and it stayed strong. So nothing really changed there. Now, the weird thing is, as soon as the market crashed, it got weak, which is, again, strange. But nonetheless, okay, I don't think interest rates going up because of inflation, because of wage growth, and because of a good labor force participation rate that indicates that we're near full employment. That all says dollar weakness to me. I think it's the taper that has strengthened the dollar. So now, as we kind of now we're expected to get through the taper quickly, maybe we can actually catch a weaker dollar. Okay? By the way, a weak dollar is good. Okay? I have a question here. Would you place a trade before non-farm payroll release or after? Well, why would I do it before? Because I'm a degenerate gambler. Okay? Right? Right? So anyways, so I think that's good. But again, here's the cross current. Here's the counterpoint. USD, look at that, USD is strong in January. So, interesting. There's sort of a double, like this is why I call it a cross current. So, a really good number today might do things like, people already discounted the taper because we're going to do it in 3 months now and not 6 months, or at least we're going to learn the faster taper whenever that's going to be, right? So that could in of itself could be dollar weakness. And if you've noticed dollar weakness recently, it may be the idea of we get through the taper faster, and that, right? So that's great. So maybe if we get a good number today, in particular in wage growth, but headline, then we burn through the taper and we get 1 or 2 rate hikes next year, which could weaken the dollar. Okay? Now think of it. If the dollar weakens and you're an American, you want to buy foreign stuff because domestic stuff is expensive. Because remember, not only does your dollar buy less, so like maybe with inflation, I can only buy $94 worth of stuff with my $100 bill. That's one way of looking at it. So you're like, well, I'm going to buy some cheap Chinese crap from Walmart because it's cheaper, right? Like you can go to Home Depot. This is a real sort of situation. You go to Home Depot, they have 5 different choices of beautiful stainless steel barbecues made outside of the United States. And they got all kinds of burners and bells and whistles and lights built on. They're beautiful. Or you can buy a Weber, which is made in America. It's smaller than the other ones. It doesn't have a light, doesn't have Bluetooth. It's only got 3 burners, not 5 burners. But it's twice as much money. And you're like, well, I can get the 3 burner with no light for $1,000. Or for $500, I can get the 5 burner. It's got the grilling station with the ceramic grill, right? It's got the boiler thing and the other thing. It's got light. It's got Bluetooth. It's got everything, right? I can connect it to my phone and watch the thermometer. And it's $500. Guess what? Americans buy the cheap one. Okay? But what does that do? That brings down inflation. Okay? So this is a very interesting, right? Cool. Now, NP says, yes, I'm going to sell the dollar for 5 years. Yes, I said that, what was it, March 20th? Something like that, March 23rd of 2020. And I still believe that. So the issue is, where are we today in the business cycle? Okay? How will monetary and fiscal policy change in the near to medium term? Okay? And are there any exogenous shocks that would impact my economic analysis? Because remember, the economic analysis is true. It's right. I'm looking at facts. But conditions can change quickly. All of a sudden, you're at Thanksgiving dinner carving a turkey and you're losing money like crazy. So anyways, I want you to look at that headline number. And just because we're running out, well, I guess we got some time. The next thing is you want to look at the labor force participation rate. And actually, I want this to go up. And if that goes up, the unemployment rate might stay the same or go up. Is that a bad thing? If the unemployment rate goes from, I don't know, 4.5 down to 4. Or up from 4.5 to, let's say, up to 4.7. You're like, wow, unemployment rate's going up. Is that a good thing or a bad thing? Well, a lot of people would say, oh my God, the unemployment rate up, that's because of Omicron and everything. What? No, because we didn't even measure Omicron. It hadn't happened when they were doing the research. But if the unemployment rate goes up, but it's because the labor force participation rate went up, then more people got jobs. That's good. More people with money, more consumption, more profits for corporations. That is good. And that would temper more people coming to work, more people willing to take jobs, would actually lower wage growth. And I'll remind you, there's 2 million women 2 million women that used to have jobs before COVID don't have jobs now. I want them to come back. Now, here's the interesting thing. A lot of women went to business school. We have the highest level of women in business school in the history of education. And they might have gone to school. It's a 2-year gig, man. If you're moving into, Harvard Business School, it's a 2-year gig for the MBA, which means maybe next year we get our first wave of women leadership coming out of these B schools. Remember, if you go to Harvard and get an MBA, and I think it's even more than 50% this year at Harvard Business School, or close to 50% of people at Harvard Business School are women. So if they finish it and they get their MBA, dude, when companies hire Harvard MBAs, they expect them to become senior leaders in the organization and talk about change. Things like women make 30% less than men, not 10 years from now, because the boss 10 years from now is going to be that woman graduating from Harvard with her MBA. She's going to come in and kick people's asses over stuff like this. And she'll fire a bunch of people that think the old way, hire a bunch of new people that think the new way, and make that radical change that should have happened 50 years ago. Because that's uncapitalist. That's unentrepreneurial to pay two people different salaries. Now you might say, oh, well, no. It's socialist pig dog stuff to make everyone the same. No. You have to have equality. So I don't say pay men less. I say pay women more, right? That's what I'm saying. So the headline is like non-farm payrolls is 327 or 522. So that's what that is, what they announced. Now we got to look at the revision, but remember, you got to be smarter than what the headline number is. Whatever comes out is going to be revised. So don't even look at this one now. Look at the last month revision. That's the real number. Okay? Can someone volunteer to post the last month's revision number? Okay? Can somebody volunteer to say, I got this. I will skip the headline number completely. I'll go straight for the revision and post it. Okay? Please, somebody volunteer. Somebody volunteer to tell us about the labor force participation rate. The LFPR. Okay? And then somebody tell us about wages. Okay? Somebody come in and say hourly earnings or whatever, wage growth. Find one of the stats. And if you could post it, that would be helpful. So anyway, right? Because remember, the Fed is trying to manage two things: jobs and inflation. So more people with jobs is good, but more people will bring down inflation. You see this? Let me say it again. The Fed is in charge of jobs and inflation. So if we get more people participating in the labor force, unemployment might even go up. But the thing is, wages will go down and inflation will be tempered. So these are it's the numbers inside the numbers. That's important. Okay, we got some movement. Okay, here it is. 210,000. Wah, wah, wah. Oh, it's usually in the release. So now I'll get it. I just wanted you guys to post it if you had it. The unemployment rate fell by 0.4% to 4.2%. Okay. The number of unemployed is now less than 7 million people. Both measures are down considerably from their highs. Okay? Okay, so here's the interesting thing. Doesn't look like new people have entered the workforce. People are still not taking jobs. I was even thinking about it like, well, some people might be hard to employ, like, you know, the kid from the rough neighborhood with tattoos on his neck. Okay? But I'm like, but dude, you can work at a warehouse. Warehouses are desperate for employees. Dude, you can get a pretty good job as a warehouse, supply chain worker, forklift, driver, and all this stuff. Like, dude, right? All right. So, anyways, among the unemployed, okay, there's 2 million people permanent lost their jobs. They're not even looking. Okay? There was 800,000 people laid off. Okay? Number of long-term unemployed is at 2.2 million. The labor force participation rate did go up a little bit. Not much. Number of persons unemployed part-time stayed the same. So if they call that underemployed. Hourly earnings down is what Forex Pipper says. So that would be deflationary, right? The number of persons not in the labor force but are actually want a job, 6 million people. About the same. 6 million people are not looking for a job, but they want a job. Like, dude, come on. Not until I'm done Far Cry 6, eh? Okay. Okay. In November, 3.6 million people said they are unable to work because of their employer closed or lost business due to the pandemic. Okay, we need these guys back, huh? CAD numbers are great? Sure. So that's crazy. Okay, a lot of people that are not in the labor force anymore, so they're not counted in the labor force participation rate. They just said they couldn't work because of COVID. So we got to get through this. There's millions of people that are not working because of COVID. Maybe it's hotel workers and stuff. Not a lot of people staying at Marriott, for example. I don't know. Professional and business services added 90,000 jobs. Okay? These guys, they don't have a lot of wage growth. It's bartenders and waitresses and the girl at the Gap who folds T-shirts. People don't want those jobs because, they have to deal with the public, and people could come in and make you sick, give you COVID while you're sitting there folding T-shirts. So you're like, I'm not going to fold T-shirts for $10 an hour, but I'll do it for $16 an hour. Okay. Oh, Nelson wants this. This is just the Bureau of Labor Statistics. This is just the Non-Farm Payrolls report. Sorry, the Employment Situation report. But sure. Okay. Employment and transportation and warehousing increased by 50K. Cool. Good. Couriers and messengers, warehousing and storage. Now, the interesting thing is if you talk to Walmart and Amazon and a few others, they want to hire like 50,000 people each or something like crazy. So for the whole industry to only add 9, I'm telling you, those millions of people that think they want a job but they're not even looking, go work in a warehouse. Construction employment went up by 31,000 in November. Cool. That means they're building new houses and repairing houses. Awesome. And it's been happening per month. 30,000 people a month are getting hired. Okay? I know I've probably had 35 or 40 different workers on my property in the last 6 months. That might be low. It might actually be more than that. Okay? So let's say 40 different construction workers. And I'm including plumbers and electricians and painters and roofers and skid steer drivers. There's been 3 excavator drivers. There's been concrete guys. There's been brick guys. There's been, a lot going on. So hey, people are working, man. They're working. Okay. I've met 4 different crane operators. Yeah. I've had 4 different crane operators on my property in the last 6 months. By the way, beautiful cranes. One of them was like brand new and the other one was almost brand new. These are $1 million cranes. And I talked to them where you go to crane school and all this kind of stuff. It's really interesting. Okay? No, it doesn't include me doing it though, Victor, right? I didn't count myself, but maybe I should. So, yeah, just crazy stuff, right? And everybody's busy, everybody's working. Okay? So that's really cool, right? Specialty trade contractors, 13,000. Construction of buildings, 10,000. Heavy and civil engineer construction, 8,000. Okay, very interesting. Manufacturing had 31,000 jobs. Job gains occurred in miscellaneous durable good manufacturing. Okay, so this could be interesting. That could be like KitchenAid, I think is it Wisconsin or Michigan? I think Michigan. KitchenAid might actually be making refrigerators again. Fabricated metal products. Vehicle manufacturing, however, lost 10,000 jobs. Employment in machinery declined. Okay? Semiconductors? So you can buy a fridge, but you can't buy a car? Or you can build a fridge, but you can't build a car? Interesting. Oh, the strike. Sorry. That's the, was it John Deere? Or, okay. Forex Pipper said the revision is 546. What was it revised up from? Okay. Baratoka says, hey, you don't need to read it. I need to read it. What do you mean I don't need to read it? You don't need to listen. But I'm doing my job. I'm doing my work. This is what I do. If you want to see what I'm doing, this is how I do my job. Employment in retail declined. General merchandise. This is not good. Okay? So you can see we need people in warehouses, but not at the mall. Oh, okay, so that's not right. That's marginal. That's not a big deal. Okay, that's fine. That's a rounding error, right? Okay, but bars and restaurants are open. Look at that. Interesting. Garden supply stores hard like crazy. Okay, so anyways, so retail, like the mall, is not doing well, but the bar is good. Leisure and hospitality, no real major change, but still up 23. Leisure and hospitality has added 2.4 million jobs so far in the year. Back to Marriott, back to the airport, right? That's good. That's interesting because that tells us demand, right? Healthcare unchanged, which is interesting. I would have thought a lot of people would have been hired just to give people vaccine shots and boosters, right? Okay. Average hourly earnings for all employees increased 8 cents. Okay? Average hourly earnings have increased by 4.8%. Okay. Average work week has gone up. That's good. Changes in total non-farm employment was revised up to 67,000. With these revisions, employment in September, October combined is 82,000 jobs more than previously reported. There's a big, look at this. It's like one of the last sentences in the whole report. This is important. If you look at all the revisions, which means better numbers, okay, better numbers than what was reported, there's an extra almost 100,000 jobs. Okay? Cool, very interesting. So that's the breakdown. Okay? Yeah, so dollar weakness would be great. Let's do some technical analysis. Okay? Well, first of all, let's go back before we look at that. What's moving up? Let's try to, let me back this out a little bit. Okay, Euro has been strong recently. Aussie does not look strong, but Kiwi's trying. CAD is strong off the good numbers. So right now you want to look at like Euro dollar or dollar CAD. So let's start with dollar kitty CAD. So I'll go to my pivots. I don't have it here because of the inverse correlation. So we can just, I'll bring it up here for whatever reason. Okay. I'm going to put a lot of lines on here. So if you're not used to my style of trading, don't get all pissy. Oh, yes, so many lines. What an idiot. Just relax, bro. Okay. All right. So I'm breaking this down into digestible pieces. So let's do that first so you get it. Okay. In this scenario of risk on, right now this is a risk on scenario, the projected high in a risk-on scenario for USD CAD in the month of December is this line. So I'm going to mark this. Projected high. Or I could even do this. Let me do it in a different fashion. Let me just use a different tool to do the same thing. Okay? I'm not actually looking at the candlesticks right now, guys. I'm just saying if you're risk on or risk off, this is how you'd be setting it up. Come on, dude. Can't get that to be horizontal. Okay, better. And I will mark this now with text, and I'll say risk on projected high December. Okay, pretty specific. I'm going to do this in, I don't know, big red. What is this? Red. Let's do it in big red. Okay. So we got, oops, gee whiz. Okay, so I'll do that. Now let me go to my tools and let me see. Yeah, I will delete that. Oh, well, yeah. No, I needed that back. Where's Jim? How do I undo? Control Z doesn't do it. Help me, Jim. Jim always knows these. I never have memorized the quick keys, which is funny. I want to put it back. Hey, does anyone know the undo, the quick key combo for undo on MT4? I just don't, I'm not a quick key guy. I really have to do that. Anyways. All right, I'll just do it over again. All right. I deleted my monthlies and I want to put them back. I just deleted them, but I want to put them back. Is there a way to just put them back? Control U? You guys are just making it up. No, don't make it up. Control Z doesn't work. It's not Microsoft Word. File, open, deleted. Thank you. File, open, deleted. No. But that just brings the whole thing back. Control Z, that doesn't work either. That's undo for Microsoft Word. No. All right, let me just do it again because that was, I guess I can do insert, indicators, custom, pivots new, and put it back. I need the target. I forgot to do the target. Okay, so I'm going to do this and then I'll delete it. Okay, so this is now, okay, risk on projected low December. Okay, now I'll delete it. Thank you, everybody, by the way. All right, cool. So that's one assumption right off the bat. Okay. So how are we going to start bringing some other pieces into this? Let me now go to indicators. I'm going to get rid of the other pivots. And I want to just clean this up. Okay, so now let's zoom in. Your job now as a trader, if you believe that risk on for the rest of December, which is another way of saying either CAD strength because an increase in price or increase in demand for commodities, or a weak US dollar for flows moving outside the United States, okay? Then what you need to do is start tiptoeing into positions based on down, 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 up, up, sell, down, 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 down. So what we're looking at here is if you believe in what I've outlined here as projected tops and bottoms and stuff, then your next trade plan is to sell 128 and take it down to 127. Between now, okay, so I'll write it this other way. Now, in this range, and Monday. What do you guys think of that? Okay? What do you think? Now, I'll show you, you're looking at my charts now and you're like, check this out. For today, this is the projected low for today. Oh. Isn't that nice? Isn't that interesting? The only way you could be wrong is to be whipsawed out of the trade where it dropped this whole amount and then goes up and takes off to the upside like a rocket ship. So you have to ask yourself, well, what's the probability of that? You're like, well, that's like being hit by an asteroid while you're waiting for the trades to set up. Okay, so it could happen, but your trade would be based on this idea, okay, of this. Okay. Now, someone that does not believe in risk on. I know there's quite a few of you that are risk off. You would believe the dollar will be strong and will remain strong. Then this where we're looking at now, let me kind of highlight this. and I want to kind of do it in a highlighter, not a pen, so I'll do it this way. For bulls on this pair, you're actually planning the opposite, and this is your buy zone. Okay? Now, it takes me a long time to draw that, so I'd rather just use a tool, insert indicators, custom, price action pivot points. That is so much prettier. So, you're thinking up. So this would be redundant. This would be redundant. Okay? And then your bias pivots, if you're a bull, you'd be set this into bullish mode. You see this? Bullish mode? So you'd look at it from this point of view. And you're right on Monday's buy zone. Currently, under current market conditions, you'll see this is fluctuating around because it's still calculating Monday's buy zone, but currently it's right here, which is, okay, which is one standard deviation below the mean. But we don't even care about the mean per se. The mean is this number here, which I already have highlighted, but let's say that's the mean, 128. You're like, oh, well, what, does that matter? I'm like, no. We're interested in the slope of the mean. Mean, okay, which is equal to M, which is equal to rise over run. And the calculation is y equals mx plus b. And m, as I've just defined, is equal to the rise over the run, which is m, which is the slope of the mean, which is a fancy way of saying is this is the trend. Fancy, right? This is the trend, the mean. So you might determine and say, hey, if that's the mean on the 4-hour, I'm a bull. Okay? And then you proceed with your rules of engagement from that. So you have to make your determination. On the short run, it says short. On the long run, it says long. Now, things change, and I can try to predict the future, but what we're doing here is that's what it says. So on the shorter run, you're kind of predicting a change of direction. Okay? And if you are correct, you're treating this like a triple top, right? And you're like, you're a risk-on trader. You believe down for the rest of December. And in that case, you already have your target. Okay? 500 pip drop. And we call this, well, first of all, you're projecting a reversal. Okay? And we call this an old man easing into a hot bath. Sorry to hear that, Darko. Maybe that's God punishing you for all the ADA you bought, huh? Maybe next time try Solano or something. So anyways. So, how many people here think this is what's going to happen in December? December. USA weakness or USD weakness. CAD strength. Who's in this camp? This would be the United States continuing to deal with supply chain shortages and moving from offshore to nearshore and doing more business with Canada. Okay? So you still need to set that up. Trading it today might be aggressive, but you would have to trade the follow-ups on smaller time frames. Okay? Lucas says that is his plan. Okay, well remember on this time frame, which I think is a very important time frame, there still needs to be development. Now, the lagging indicators still say bullish, but I think what you might be doing is trading a change in trend, and it would still, let's say over the next week, need to produce something like that, and somewhere on this turn you make money or you enter your trades, right? So you know, like for example, if we just hit one standard deviation, we don't even get a lower low, right? Like think of it, you're going to sell something at support, you're like, no, I don't do that. So when will you have to sell it? Well, lower high. But you know what? Before I look for lower highs, I always look for lower lows. And then I look for a lower high, and then I drop it like it's hot. Drop it like it's hot. Huh? What do you think? I'm going to check something. Hang on. All right, 1 out of 3 people have clicked the thumbs up button. Please click the thumbs up button out of courtesy for FX Street. They've been host to this webinar, to my webinar, for over 15 years. Be gracious enough to our host to at least reach out and click the thumbs up button, because that would be good for the YouTube algorithm and that would support the FX Street community. Would you please have some common courtesy and click that thumbs up button, even if you hate my guts and you think I'm a dork at best. It's not about me, it's about FX Street. Give them some love. Come on, click that like button. I want to see it. I'd also like to thank the people that don't like me, don't like the analysis that I'm doing, but you're sticking around to do the thumbs down button. That's cool of you. Gold, already did it. Yeah, right on, Raymond. Hey, and thanks for staying up till like 4 o'clock in the morning, huh? All right, let's take a look, in fact. But anyway, so I'm trying to show you how to handle multiple time frames and all that kind of stuff. So make sure you know what your intent is and then set up your trades. No, but we could do no key. Let me do a run on the majors and then ask me again, okay, Nelson? How to keep track of multiple pairs. I organize them in workspaces. So I do things like scan pivots for the dollar. Okay. And then I'll move over scan pivots for the yen. Or if I need to do like relative strength exercises, I can do like scan the euro. Okay. And then I can do something like scan the Swissy. Okay. So, and then I do things like indices. So I'm like, oh, CAD's red hot. Yen is coming down. Cool. So that's how I do that. Okay. Every breaking wave on the shore. Now's the next. There'll be one more. All right. So pretty standard operating procedures here. Up to the 21, drop it like it's hot. This market is bearish. That's that. Okay. Cool. That's that. I can't do anything else about it. That's that. Now you're like, well, Wayne, this is set up bullishly. Okay, well, that's the template. Oh, you know what? I have a new template, don't I? Template, daily confluence bearish. Okay, so this is the bearish point of view. I look at this bearish, see, done. And then I look at this. Now I'm not looking at all these other lines anymore. What I'm looking at is, this is today's sell zone, which I knew yesterday. This is Monday's sell zone. That just gives you an idea. I knew where this was yesterday. Okay, and this is what it says. It's not my opinion. My only opinion is whether I want to be a seller or not. But the chart is 100% bearish. The entry is 100% bearish. And the target is preset. And this is what we call an Arctic turtle. If we're going to take it down here, we might as well take it down here and then have it snap back. Okay? Don't ask me where I think. I don't think. Remember, I have so much education, I'm stupid. So don't ask me where I think. Ask me what the chart says. Okay? So ask it again, articulated dreams. Say something like, what does the chart, I don't know, just rephrase it. What does the chart say the projected bottom is? And then I have a follow-up question for you. Okay? Okay. But you have to tell me top or bottom and what time frame. What does the chart say? Tell me, as a bear, where do I take profit? As a bull, where do I enter? What is the top of the market? What is the bottom of the market? You got to be specific. Okay? No, it's not messy. It's clear. It's just charts, guys. As a bear, where do I take profit? Awesome. Thank you, Articulated Dreams. Sorry, I'm picky with language, but it matters. Okay? Now, where do I take profit? What time frame are you talking about? Short term? Let's say daily, weekly, or monthly outlook for taking profit. No, keep going. Yeah, there's a bit of a lag. I get it. So I'll wait. Daily, weekly, monthly outlook. What do you want? Daily. Easy. Easy. Oh my God. By the way, if you want to learn how to trade like I do, FXBootcamp.com, put a credit card in. It's less than $1,000. Oh my God, it's less than $500. Whatever, dude. Right? So check this out. Okay? This currently is the top. That tells me 1.3 2, 3, 3. But then I'm going to put some intuition in here and say that some people are going to go for 1.3228. So somewhere between 28 and 33. You're like, dude, that's like the same thing. Well, I'm just telling you what the chart says. Okay? How is that? Lovely, little mum. As they say in London, right as Wayne. What does the chart say about euro dollar? Okay, that's funny. I love how quickly you guys change your language. That means you is smart. All right, let's go to the dollar. Okay, what does it say? Okay, so you're buying it. Okay, let's take a look. Let's break this down. The first pattern has occurred here, which produced the higher high. Great. That produced the higher low, and we call that Johnny's rocket. That's Johnny's rocket right there. Johnny bought it right there and went up and 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 hit the central pivot point and fell back down to earth. Right? Interesting, right? So this was a beautiful entry and a hardcore exit right off the monthly central pivot point. Holy smokes. Now we know that's resistance, but like, dude, seriously, look at that. Dude, well, these are complicated times. Okay? Okay, cool. So here's the thing. Okay, on the smaller time frame, you can see this was a daily, this was a daily, and this is a daily now. Do you see the problem with that or the difficulty with that? It's making lower highs and potentially lower lows. Okay. Robin says, work until, well, I don't define what I do as work, which is a really interesting thing, because I tell you, I was very, very, very active for well over 12 hours yesterday doing things that people would consider work. Okay. But I don't have a job. I have a lifestyle. So anyway, so I don't work. So I've already retired. So yeah, so 70. Why would I stop? I don't know. It just doesn't make sense to me, right? So anyways, this is the problem of what's going on, right? So how can we kind of analyze this? We can do this, and I can say, let me just clean this up. Let's go to template, simple. I think I got these B bands on there. Let's kill that. Okay, and say, since Johnny's rocket came crashing down to earth, how do we analyze this market? Well, I would manually go through and calculate all these candle closing prices and then enter in Y equals MX plus B and then break it up into quadrants and find the intercepts and the slopes. Or you could just do this. Insert, indicators, custom, price action pivot points. Okay? And what it says now is not up. Okay? So we're back into this kind of crazy volatility. I can tell you, I've had multiple trades that in the course of, let's say, 4 hours, we're up 50 pips, 60 pips or something. And we're coming up on support, but the way it's set up is it should drop below support and everything should be good. And I got it all golden. My entry is pretty reasonable. And then 4 hours later, I'm knocked out at -3, right? Because to me, break even is -3. So it might be one of these things up, right? Up 50, down 75. Well, there's, like I said, there's a lot of cross currents going on right now. Lots of different market participants making different decisions because they have different exposures to risk, or they're managing those exposures to risk in different ways, like rotating through sectors in the stock market, or rotating out of the United States stock markets and into European stock markets, or shifting where they put their money on the yield curve. So the 2-year has changed a lot, and more than the 5 and 10 and 30. So, you know, all these things are happening, right? Okay. Okay. So if you're like, man, blindsided on that one. Yeah, well, it's happening to everybody. Good, bad, and the ugly, right? So this is why you have to really be careful. So like now when I enter insert indicator custom biased pivots. Okay, these are my biased pivots. And whoever asked the question said they were a buyer. Okay, so let's put it in bullish mode. Okay, let's put it in bullish mode and see what the trade plan for today was. Oh, and I got to put this midpoint's true. Okay, good. Okay. Let me make this. I want to make this even more simple. Where's the one projecting? One, plot pivots, future pivots. No. Okay, I want to put this to false. I just want to stick on today. Okay, so if you were a bull, that was the trade. You wanted to buy it around 113, and you wanted to take it up to, well, in this case, if you bought 113, the target would have been 113.50. It says profit target conservative. Can't get any easier than that. Okay? That's the bullish point of view. How many people here would like to see the bearish point of view for today? Okay. By the way, the dollar strength to me says the Fed will increase the taper, but not by much. Okay. So there's about a 30-second lag on the stream. That's normal, though. All right. So let me do that, right? Let me do that. So I go, again, indicators, biased pivots, and put it to bearish mode. Remember, I would have had these numbers yesterday. Yesterday, my pivot seemed so far away. Dollar strength is here to stay. All right. It says this is the sell zone. And you can see that because it says bearish selling zone. And the target is bearish profit zone aggressive, bearish profit zone conservative. So the numbers Conservative target 112.71.5 all the way to 112.62. But then what I call an Arctic turtle, we're so close to support, we're going to stretch out and catch this. So why don't we say 112.50? Oh my God. Will I be covering the stock market open? Nah, I don't think so. I think I'm going to go. I don't know. Maybe. I don't know. I've had such a long week. Just crazy. I had such a long week. Oh my God. Oh. Does anyone want to join FX Bootcamp? Join my team? Or at least sign up for the training courses? I'm going to do a big launch in January. Yet another upgraded system for better quality videos. And I'm going to put in some sort of like quizzes and stuff inside of that. And I have a couple of new membership levels that I'll roll out in early January. Okay. Can you join my private group? Only if you have money. My private group costs this much every month. Okay? Okay? You got that? Boo, boo, boo. What can you learn in private group? Nothing. Nope, nothing. Nothing. That's my sales pitch. You're not going to learn a damn thing. Yep. That's what I promise you. You don't want to join? Don't join. There's my sales pitch. Don't worry about it. Life goes on without me 'cause I'm just a Forex trader. Yeah, I don't need to be your guru. You should give Tony Robbins $5,000 and go, whoa! But that's not what the Wayne do. So anyways. Yeah. Dude, I actually saw Tony Robbins live. He was at a different conference. He was like one of the guest speakers. Oh my God, I've never seen worship like that in my entire life. It was crazy, unbelievable. I'm standing in a room of thousands of people and they're worshiping him like the Messiah just came down on stage. It was amazing. I couldn't believe it. Just couldn't believe it. It was a nut house crazy show. Right? It was amazing. Wow. But that's not me. That's not me. A friend of mine, though, paid something like $20,000 to go to a Tony Robbins business thing. I'm like, dude, you paid him $20,000. Wow. That's not me. It's all right. I'm just a humble currency trader. All right. So anyways, so you have to find where you live on this. One of the things that I always look for is not just a 21.55 cross on the 4 hour, but a 21.55 cross on the 4 hour for all the pairs. What we call congruency. So you may see that there's still some bullishness left in here, maybe. We don't know. But what it does show you is that if this crossed up and the others were still down, then there's euro strength. But you might be doing this out of dollar weakness as part of your plan. So what I'd rather you do, if you're going to buy a one-off cross, you open up your euro and maybe find something better than euro dollar up, like how about euro Aussie up? You see this? Cool. Oh, Thiago, I just saw your post. You're going to be a portfolio manager on my team next year? It's cool. I got it ready. I got to like send out an email or something. Gee whiz, like. Anyways, yeah, I got to set that up, but it's ready to go. Pete says, I learned more in one swing trading session than I have in a year. No kidding. Are you talking about the one last night, Pete? That was a bonkers one, huh? Okay, so again, if euro dollar is the only one that crossed up, what about euro Noki on a bigger time frame? Well, not much different than euro dollar. How about euro yen? Does anyone know what this green zone is? That's the buy zone for today. What's the target for today? 128.41A. Okay. Now you're like, but what if we go to the aggressive zone? No, there's no what if. If you want the answer, 128.41. But it could get. Why not? Dude, I'm just looking at the chart, man. So if you know how to trade, in this case with pivot points, it couldn't be more specific. So that's what it says. Now, could it go higher? Could it go to the 200? Could it go to the central pivot point? Could it go to the aggressive target? Oh, yeah, it could. But now you're, I don't know, winging it. You're throwing in some weird hope or something. What it says is 128.41. So you can do what you want and see if you can hang on and get 5 more pips, or hang on and get, 20 more pips. Okay, well, make those decisions when you get there. But when you bought it down here, okay, then this was the target. That's all we know. And after that, you're on your own, son. Okay? Malaysia doesn't have Bitcoin? It's weird, right, Jim? You're like, isn't that the whole point? What is the name of the indicator? Well, those are my bias pivots. So I can show you the name if you want. Bias pivots. FX Bootcamp Training LLC. That's me. Oh, me. Right? So there you go. That's what they're called. They're just pivot points. No big deal. Cool. All right. So anyways, cool. So that one might be better is all I'm saying. Here's the interesting thing is if you get this right, this is what it says. Okay? 132.95. Okay? We're basically at 128 going for 133. Smells like 500 pips. Cool. So anyways, if you like these indicators and the templates and all that stuff, you go to, I'll put the link here. Okay. Cool. Okay. Now look at this. CAD is killing it and hitting targets. Okay. So we're in the crush right now. What this chart is saying is out. Not in, out. Hey, thanks for the update though, Johnny, too. I got your email this morning. Cool, man. What do you think about that? Yes, I did, Jim. You're the one a week ago, right? Yeah, I'm sorry, man. I don't know what's going on with that account, but I guess I have to just give you a new one or something. I'm sorry, man. Like, dude, I woke up early and I worked 13 hours, 14 hours straight, and then cooked, dinner and did the dishes and sat down, drank a glass of wine and went to bed. Just redonkulous, man. Meanwhile, waking up at 3 in the morning, check the charts. Oh, good. Ozzy hasn't done anything. Just, yeah. It's the issues. Yeah. Gotcha. I'll try, man. And it's with your MetaTrader site, isn't it? It doesn't recognize your email for some reason. I wonder if it's just used a different email, or sometimes people misspell their email, so it logs them in, they download the tools, and they come back, and then they type in the email correctly, and now it don't work none, right? Yeah. Just I haven't been here in a while, so I just want to make sure it's still working. It's still loading. Okay, that's fine. It's all good. All right, it's working. Here's all the downloads, but of course then you just run install everything for me on MT4, 200 plus files. Install the downloads. Cool. Open. Install for me. Yeah, it seems to be working. Yeah. Welcome to MT4 MetaTrader Standard Dual Code Wizard. Cool. So yeah, okay, it's working. Good. Good. Nice. All right, so it's working. Nice. At least it's working. Cool. Anyway, so let me go back to this. Out. I don't know anything about a Mac. right? Yeah, I assume just Windows. Let's buy a Windows machine. As for MetaTrader, who trades MetaTrader on a Mac? But anyways, I guess okay. Coolio. All right. Interesting. Stock market is open. Let's do some exotics, man. Using MT5 on a Mac. Interesting. Cool. You just buy it. I mean, you buy a Windows machine. They're so cheap. Okay, look at a rand. Get around, I get around. Yeah, get around. Whoa, I get around. Boom, 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 boom. Okay, we're at a 50% pullback on a rand. Okay. This was the day we thought a taper would be announced. If not then soon. And then we thought again here, and then not, and then finally here it was. And so this is sort of my idea of USD strength because of the taper. Because of the assumption of a taper. People are moving their investments. Okay? So think of it as quantitative easing on this line and no QE on this line. Now, once we get through QE, or at least the assumption it's over, which is coming soon because they'll announce it'll be over not in June, but instead in March, well, then we'll get into a period of rate hikes, okay, which is inflation. What is inflation? Weak dollar. You need more dollars to buy the same thing, therefore higher prices. Therefore inflation. So if we're just on an inflation play, then we're looking at that. So how does all of that work? Okay. All right. Where's our university kids? Oh, I guess they got their Friday presentation today. Vodka, is Vodka here? He has a big international finance presentation today with his group. Blank. Cool. And let's try to get, I can't get that out of the way. It's right in the middle. Too bad. All right. Don't get distracted by that thing. Or maybe I can erase it. Maybe I'll just erase it. Okay, let's talk about, I don't know what you want to call it. Money supply, I guess. Okay, supply. So let's draw a chart. La 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 la. And we will label our chart because we're good students. And we'll say this is what, the price of money or value? What do you like? The value of the dollar? We'll put value. And then this is the quantity of dollars. Okay? And this is 0, 1, 2, 3, 4, 5, 6, 7, 8 quantities, and 1, 2, 3, 4, 5, 6 values. Whatever the unit is, it doesn't matter. Up and down. Okay, so the first thing we want to talk about is the demand for money. Oh, there's vodka. Yeah, right on. Cool. All right, so the first thing is, does the demand curve slope up or does the demand curve slope down? Please answer. Bum, 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 da-dum, ba-dum, ba-dum, bum, 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 ba-dum, bum, 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 ba-dum, 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 bum, 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 ba-dum, bum, 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 bum. Yeah, wow, we have a delay, huh? Wow, amazing. I had to do the whole song and finally got an answer. Okay, so demand is down. Okay, so let me explain. Okay, when prices are high, when things are expensive, you don't want many. When prices are cheap, or the value is cheap, you need more, one way or the other. Okay, the difference of expensive, so it's very valuable, you don't need many to buy. If it's not valuable, you need more to buy. That's why the demand curve shifts down, because you can plot equilibrium. Ah, oh, dang it. Okay. And what you do is you plot different prices and demand at different prices. And what you'll find is it'll produce something like that, downward sloping. Okay, now, what direction does the money supply curve, the supply of money, the supply curve, what direction does the supply curve go? Dum bum 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 ba da bum 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 ba da bum 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 bum. Okay. Let me draw it in blue. No, let's do a different number. Purple. Vertical. Yeah. What? That's BS, Wayne. That was a trick question. No, I just said, what's the direction? The reason for it is that's the supply. That's how much there is. There's only one number. Oh, well, if the value goes up, well, that means the demand changed, but there's only the amount. How much money is in your wallet? That's a vertical line. Well, what if the value of the dollar drops? You still have the same amount of money in your wallet. Right? Like, what do I got sitting on my desk? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I don't know. I got a couple of grand. All right, I got a couple of grand. All right, good. The value of the dollar drops 1%. How much money do I have in my hand? The amount of money I have in my hand hasn't changed. It's fixed. I got a couple of grand. It doesn't matter what the purchasing power of it is. It's all I got on my desk. It's fixed. It's vertical. Cool. Trick question, right? But no. Okay. So what did the government do? Okay. Think of the Fed and their quantitative easing, Fed QE, and the Trump-Biden administrations. What did they do, these two governmental institutions? What did they do to the money supply in response to COVID? While you do that, I'm going to make a point here that based on this equilibrium, that's the value of money. Okay. Yes, the Fed, quantitative easing is pushing money into the economy. And then Trump put in $1 trillion, and then I think another $1 trillion, then Biden put in $3 trillion, and then $5 trillion, and then $20 trillion. I don't know. That's a lot of teas, man. It's quite a tea party. So what does that do? Okay. That will shift the supply from, let's say, 4 to 6. Oops. From the supply goes from 4 to 6. So let's say whatever these units are, trillions, let's say they pump 2 trillion, but we know there's more than that, but whatever. We increase the amount of money, in this case, 50%, right? Okay, cool. So now let's draw a new curve. They call it a curve, even though it's not curved. Now we have to move the equilibrium to here. And now label your charts. You got to be a good student. This is, right? You can call that S1 and S2. And what we've done is we've shifted S1 to S2. S1 to S2, right? There's an increase of money in the economy. Cool. So what is the value of the dollar? Okay, well, this is what happened. We moved the equilibrium point, so the equilibria shifted, and now the new value of money is 2, which means we shifted the value of money down. And another way to describe this is call it inflation. But what I'm saying is if there is inflation, the dollar will weaken. The value of the dollar weakens. The supply of dollars, the quantity of dollars went up. The value of each individual dollar went down. Okay. Okay, and I think I'll take one last question, and I'll go with Sunil's question. What's your view on oil? By the way, was that good? Can you give me some love? Now, interesting thing is, if you studied at Harvard, you probably learned from Mankiw, and right? And he is a supply side economist where most are demand side, but that's an interesting supply side discussion. Now Mankiw might say he's more focused on let's say the demand for commodities, right? Or sorry, the supply shortage that we're having on all kinds of things in the economy, and that's pushing up prices. So he might sort of double dip on that and say, that's why we're not running at 3% inflation, but 5% inflation. So the demand side of the equation would say dollar should weaken. But on the supply side of the economy, not money supply, but the demand in the economy is red hot. That would create, right? Now, the second point is that there's a supply constraint. So now we have a lot more demand from all this free money and less supply because of COVID shortages. And there's a double dip, and that's why we don't have 3% inflation, which the Fed thought we would have. Instead, we got 6% inflation. So the government pumping more money in would only harm us more. And this is why they're shifting. And then hopefully over time, supply constraints diminish and inflation comes back down. And not to 3, but probably back down to 2. So that's the next 2 years drawn out in a graphical model. I hope you enjoy that. Now, do you guys want to get into the energy complex and talk some crude? And then we'll call it a day. Okay? Okay, so we'll go back to commodities. We'll open up crude. Okay, we'll take, I'll just put a simple chart on here. Okay, cool. What price is crude oil going to go to? Audit, you have to do technical analysis that may override your long-term fundamentals. So short-term short, but long-term long. Yeah. Cool. Okay. You got your presentation today? I think you do, don't you? All right, so here we are. What price is oil going to go to? Well, see, this chart doesn't answer that question. Now, I can throw on some pivots and give you some guesses, but let's not do that for now. We know there's fundamental challenges here. So if we get a solution to our current problems, it would be things like increasing supply. Well, right now, governments around the world have tapped into their strategic petroleum reserves. Okay? 3 days worth. All right, so that's this part of the drop. This part of the drop, so let's do this. By the way, 3 days worth of oil is not a long-term fix to high prices, right? Oh, right on. Yeah, that sounds like a good presentation, Vodka. That's really cool. You know, in my strategic consulting class at Harvard, I worked with a group and we reorganized Goldman Sachs. Did a full reorg with them, breaking out retail and stuff. It was pretty interesting, but you know, I love those types of projects. Okay. Cool. So this is Omicron. Now, this is definitely short term. This might be short term, you see? This is supply going up. This is demand going down. You see, we just did a presentation on supply and demand, right? Supply side and demand side economics. So this is a double dip, double drop, double the pleasure to the downside, right? So let's say both are short term. Let's say we find out Omicron is no big deal. Okay? So what will keep oil prices down? Okay, let's get rid of the short-term nonsense, government creating short-term price drops and then fear about Omicron. Then we find out whatever. So what would keep prices down? Any thoughts? Well, my guess, because there's a 30-second lag, so let me just keep going. My guess is you're going to say American fracking. Because that's what happened last time. And the United States was producing an amazing amount of oil, and they were exporting it. And all of a sudden, Saudi Arabia was no longer a swing state. Okay? So now that oil prices are near $1,800, oh man, well, we're going to see fracking expand, right? That's where the supply would come from. America isn't producing not even close to what it was a couple of years ago. Okay, great, good. So we're nowhere near pre-COVID. So what has changed? Well, one thing that's changed is oil for frackers cost $40 to $50. I think it was basically $40. Let me go back to there. It was $40 a barrel cost for frackers in the USA. So in the last, remember when oil went to zero? One of the contributing factors for the giant drop was the United States was producing oil like crazy. And Saudi Arabia decided to increase supply below $40 for a sustained amount of time, so frackers in the United States would lose money, not be able to pay their debts, and go bankrupt. And then the plan for Saudi Arabia was then go back, bring oil back up. But meanwhile, let's say 40-50% of frackers in the United States go out of business. Do you understand that? It's good logic, right? That's a true war. What happened? Well, they got it down to $30 a barrel, and then COVID hit. And all of a sudden, nobody wanted oil because nobody was going to work. No airplanes were flying. No one was staying in hotels, right? Offices were empty. No one needed to drive anywhere. I started getting all my groceries delivered. Who goes to a grocery store anymore, huh? So it's just amazing, right? And oil went to zero. So what's changed? Let's talk about the behavioral finance. What's changed is everybody lost money. Everybody had problems paying their bonds. That's why they're junk bonds. It's very speculative. A lot of people learned a lot of things, and the ones that survived said, we are never going to be over leveraged again, so that Saudi Arabia can't try this nonsense again. Because now it's a threat. Like, if the United States is producing too much, Saudi Arabia, because Saudi Arabia, their cost is like $2. Saudi Arabia pays more for the barrel than they do for the oil. So they're like, yeah, bring it down. We'll have a bad year, but we'll put those guys out of business. And then we'll bring it back up, and next year it'll be fine. Okay? So now they're like, we're not going to be over leveraged. Okay? And so on and so forth. So they're going to be slower to come back and turn the wells on because they're going to borrow less money. Now, we've also had a shift in administration at the government. And there is more regulatory and compliance cost than before. You have to worry more about the environment. You have to worry more about the rules. You have to worry more about, all kinds of things. And you can't get a truck driver, all that kind of stuff, right? Right? Okay? So they're less eager to get in the market, but also this cost, because of all kinds of things going on right now, is probably $70 a barrel. And a lot of it is new regulatory compliance costs. No, I'm not here to argue whether, having the Environmental Protection Agency force frackers to clean up all the spill water and wastewater that gets out. Like, I'm not arguing if it's good or bad. I'm giving you reality. And the reality is frackers now need $70 a barrel just to get the job done. Okay? So now what? I would say that that's the new floor. In fact, it's probably more like 80. So what will happen is once we figure out the short-term stuff, we get back up here to 86. Maybe later in the year, but whatever. But that's the new number. And the thing is, if they're that slow to leverage up and find more supply, then as demand continues to increase, as we crawl out of the COVID cave, demand will increase, but supply will increase much more slowly. And this creates what we call in economics an indeterminate situation, but what we know is higher. How much higher? Well, we don't know. That's indeterminate. Depends on how quick supply goes, and I can't tell you out of the, are we going to go from 30,000 wells to 40,000 wells? I don't know. I don't know what business decisions other companies are making about should they frack, should they not frack. I don't know their individual costs. I only can speculate on the aggregate cost and all that kind of stuff. And right in the Permian Basin, there might be one cost, in a different place with less salt, there's going to be a different cost, and whatever, man. But demand is likely to go up if we crawl out of the COVID cave. Supply will go up too eventually because we got the high numbers. It's worth producing. But then how quickly can you turn on the taps? Well, you know what, dude, this takes time. It takes money. You don't just flip a switch and increase supply. That's what Joe Biden did, and that worked for a week, but it's not going to work for a year. So I would say, shoot, man, $100 a barrel over the next 12 months? Why not? I could see that's being sustained. It'll probably take a year or more for supply to catch up with demand. So $100? I think Deutsche Bank said one as high as 150, but I think a base case, oil farting around $100 a barrel for a while, seems reasonable. And that's it. So see you, vodka. See you, everybody. I hope you enjoyed the fundamental side of some of these equations that you're calculating. What's the value of this? Where should that go? Where are we going to be in 3 months on gold? Where are we going to be in 3 months in oil? What about money supply? How did this affect things? How does the taper affect things? Well, how does interest rates affect things? When are these things going to be decided? And what is the response to all this changing information that we're getting? Well, reshaping of the yield curve, rebalancing of stock portfolios, and some choppiness in the foreign exchange market. So on the short run, it's complicated, bro. So be smart about what you're doing. And the second part, on the long run, well, I don't know about Omicron, but so far it feels like on the long run, nothing's actually changed that much. But we got new information coming in all the time, so, trader beware. So please click the like button and thank FXstreet for being a host to this webinar for 188 months. 15 plus years, by the way. That's a lot longer than your last Forex guru. Okay? And I think you can get a little sense of, my macroeconomics degree from Harvard. I also have a financial management graduate degree from Harvard. So maybe you get a little sense of all of that. Cool, I'm trying to share, man. I love this. I'm passionate about this. If you want to learn how to trade, technicals, fundamentals, monetary policy, all that kind of stuff, That's FXBootcamp.com. If you type in COVID-19, there's a bit of a discount. It goes from not much money to a little less money. Like, I don't know, $120 discount or something. I can't remember what it is. Inside of that, you can join my live trading groups. We meet weekly and daily, depending on which one you want. There's a different price. It's not a lot of money. That's not the point of it. Okay? My chart templates, as I posted, metatraders.com. My book is on, guess what, Amazon.com. I invite you to visit tradersway.com. Okay? Tradersway.com, a boutique foreign exchange trading firm that actually pays you swaps. Actually is a fast execution speed. It's just like the normal stuff you want. The fees are not high. Narrow spreads, or if you prefer ECN, it's just, they're competitive. Dude, it's good. They're good. Go check them out. Tradersway.com. That's it. I think that's it. So thank you to the moderator for moderating like no moderator has ever moderated before. Thank you to FX Street for hosting for 15 plus years. And by the way, that's just this one webinar. I've worked with FX Street for more than 16 years. It's probably closer to 18 years. Right? So that's really cool. And of course, let me do it this way because you're good people. I want to do this properly. Peace on earth. May the pips be with you, and may your profits be above average. See you, everybody. Cheers.